Hi, I'm Cathy McBreen, president of Millionaire Corner, and we are delighted to have here today Luke Knecht, one of the foremost leading fixed income portfolio managers in the country. Luke, who you will meet in a moment, currently works as a partner at Dearborn Partners in Chicago, Illinois, which is a SEC registered investment manager. Prior to that, he worked at Dresner RCM Global Investments, and prior to that, he was the chief investment officer at Harris Investment Management. Hello, Luke. We're glad that you're here.
Thank you. I'm pleased to be here, Cathy.
So many of our viewers are retired already,
yes.
And some of them are depending upon maybe their bonds or their portfolios that are highly leveraged with bonds to finance their retirement. Talk a little bit about these different environments and what they should be looking for in the next 2 to 3 years or even the next 6 months as far as their portfolios and what maybe they should be talking to their advisors about.
Boy, that's a great question. There's been a great attempt to improve yield. You know, with government bonds at a 2% yield, it's tough for people on fixed income to earn the kinds of returns they need to support themselves. So the past 2 years, there's been a lot of people moving into either high dividend paying stocks, thinking that, geez, I'd rather get 4% on Intel, even though I know I've got a lot of risk, than own a treasury bond at 2%. Or they've also been buying a lot of funds. And there are a lot of bond funds out there. Some are open-end, some are closed-end bond funds. And those funds, to the extent that they have employed, as you mentioned, leverage, borrowing short at a very low rate and buying longer securities and earning the positive return differential between those two, that's been great as long as rates were stable or falling.
Right.
When rates start to rise and the spread shrinks and the longer bonds they've been buying experience losses, that's going to be problematic for the investors who were using those vehicles as a way to supplement their income or increase their income. So investors do need to take a step back and say, gee, if we've turned the corner and rates are now going to be rising, will the same strategies that I've been using to produce income in my portfolio work going forward, or do I need to rethink that? And that's a great question to ask your financial advisor.
Thanks again, Luke, and thanks for watching Millionaire Corner.